right. We'll call us back to order, and we'll continue with commissioner questions. Commissioner Hamilton.
Thank you, Mr. Chairman. Mr. Garcia, I'm the man from the PD, and so I got to go back when we finish Friday afternoon, and I'm real...
Get a little closer to the microphone.
Okay, I'll do it again. I'll do all I can to let my people know that you have been transparent and calling and trying to collect and hook up with each one of them on. But I know some discussion we had that came up about this special farm rate, agriculture rate. And I believe you said you probably did have a cotton gin rate and things like that. Yes, sir. The rates that you've talked about the day that you called the farmers that had the number of meters, does that combine the meters where they just get one bill for the farm, or what? Tell us a little bit about it.
I don't believe so. I think Mr. Steve Wheeler can address that question. I don't believe we reduce it to 1 meter, no. Okay,
but so how does it help them then? Or do I need to talk to Mr. Wheeler about it?
Mr. Wheeler would be the right question.
I'll do that. Thank you. Thank you very much, sir. Let me, Ms. Bateman.
Yes.
Let me ask you a question I've got written down here if I find it. Do you agree or disagree with ORS and Customer Connect and AMI meters are not extraordinary expenses as defined by FERC electric chart of accounts?
So thank you. First, I want to say that cite to the FERC chart of electric accounts has nothing to do with deferrals. It has to do with criteria to book items to certain FERC accounts that are extraordinary income or extraordinary deductions. So I don't think it's relevant. But I would say that I think Customer Connect and AMI are extraordinary projects that the company has undertaken. I mean, Witness Hunsaker can speak more to this, but the Customer Connect is the first new billing system in decades. So I think that's an extraordinary project that the company is undertaking. And I think the deployment of AMI meters is also extraordinary. Deploying new automated metering infrastructure to all of our customers and the possibilities that will open up is an extraordinary effort. And I think Witness Schneider can speak more to that.
Okay, I think we'll probably talk to him much more about that because in the previous hearing that we had an awful lot of people that were disturbed with the new meters. Thank you very much.
Yeah.
Thank you, Mr. Chairman.
Thank you. Commissioner Howard.
Thank you, Mr. Chairman. Mr. Ortego, you were pretty vocal there about how you've done and what you've done and what your company has done, I guess I should, to, sort of lessen the impact of a rate increase. Is there anything else you want to add to that you might?
I think, I'm thinking back through my testimony, both my direct and certainly in testifying today, I've identified some things that we do, some things that we're doing, particularly in response to the complaints we heard at the public hearings, the efforts we've made to make sure that we're not asking for any more than we need. But ongoing, every day, we encourage our employees to keep their costs low. And we will continue to do that. We are continuing to drive costs out of our business because that's what our customers expect. And we will continue to do that.
Give you a thought process. During the night hearings, I was sort of taken back by the fact that there were farmers that had like 30, 40 meters, and each one of them were billed separately, and I think Commissioner Hamilton touched on that. Then it occurred to me that in a cost of service study, it seemed like there would be some good economics of scales of economics that would lessen the impact, so the same meter, there would be less of price for each meter than just multiplying out. It further took me to the possibility of declining block rates for multi-meter customers. You follow me?
Generally, yes.
I don't know that I do. But no, but it seemed like if a customer had 30 meters, it shouldn't be the same cost. Doing a cost of study survey shouldn't be the same for each meter. It should be some economies of scale. And that's a Mr. Wheeler question?
Yes, Janice Hager, but and I don't think that's the way economies of scale want. I mean, if the customer needs less than 10 meters, I think they should sign up for less than 10 meters. But if they choose to sign up for 10 meters, I think then you try to put them on the best schedule to minimize their bills, and that's what we're trying to do. But Mr. Wheeler will explain and Ms. Hager can also explain the cost of service study. And
I was just wondering if you're given any thought declining block rates. Have you given any thought for any particular reason? And you probably answered the question that they should use less meters.
Well, I think what I'm saying is they have the meters they have because that's what they need.
Okay. Ms. Bateman.
Yes.
Let's talk about unprotected EDITs.
Yeah.
You're proposing a 20-year flowback for the property, plant, and equipment, and then you're imposing a 5-year flowback for the non-prop, PPEs.
Yes.
What prevents y'all from expediting those flowback times?
So I think, and I think Witness Sullivan can speak to this as well, but it has to do with the cash flow impacts on the company. And so when the federal tax law was first passed, shortly after that, one of the credit rating agencies came out with a report talking about how the tax reform would have negative impacts on regulated utilities. And Duke Energy was actually put on I think it was like a negative watch. And I believe this is in John Paniza's John Sullivan's testimony, Paniza's testimony that outlines that. And so I think the credit rating agencies were watching very closely because the tax reform had the potential, if the benefits were flowed back too quickly to customers, to have negative impacts on the utilities from a cash flow and credit metrics rating perspective. And I think, and then they later reversed that and put Duke Energy back to a stable outlook. And a lot of that was based on some of the decisions, commission decisions that had come out that were considered constructive. So this commission came out with a decision to require the utilities to defer those impacts and address them in the next rate case. The North Carolina Commission came out with a similar order requiring utilities to address the excess deferred income taxes in the next rate case or within 3 years. And some of the other Duke Energy jurisdictions came out with other similar constructive orders. And so I think the 20 years and the 5 years is what we thought was reasonable and appropriate to balance the interest of customers along with the impacts to the company's credit ratings and cash flow.
Thank you very much. Thank you, Mr. Chairman.
Thank you. Commissioners, anything else? Let me ask just a couple of questions. Ms. Bateman first. On page 17, we talked of your pre-filed testimony. We talked in the DEC case about the reserve fund for the end-of-life nuclear costs. I have a couple of 3 questions on this. That's different than a couple of 6. The company, determining now that certain materials and supplies have no salvage value, why do you do that now?
So I think that it's generally, we expect that there will be end-of-life costs for the nuclear plants. And if you look at, and I believe Witness Henderson can speak more specifically to this, but the nature of the materials and supplies at a nuclear plant in general is such that they have little or no salvage value. And then the same is true for the last core of nuclear fuel. You can't just burn the fuel down to nothing. Right. So we know that there's going to be some cost at the end of the nuclear plant's life. And so what we're proposing is to start establishing a reserve for that now. And I will note, and I think I put this in my testimony, that the reserve is a reduction to rate base. And there's a pro forma that I put that reduces rate base by the first year's amortization that we're proposing. It is in a separate GL account, and I can give you a little bit based on our experience because this is approved in North Carolina. So it was approved in the 2012 North Carolina rate case for DEP. We started accruing for the reserve, and then in the most recent rate case, we updated. So again, we looked at what's been accrued to date, what are the latest projections, what's the time period left to the end of life that we currently think, and we updated the accrual to whatever the appropriate amount was based on that rate case. And it's held in a separate GL account and is a reduction to cost of service. It can be updated in each rate case.
Well, let me ask you, how do you decide or tell the difference in, and I think we've talked about this before, but certain end of life cost, you're going to have decommissioning, and then you've got the end of life reserve. How do you decide which goes where? And do you do a study, or does a third party do a study, or how does that work?
So my understanding, and Witness Doss could probably explain this in more detail, is that there are specific requirements to what is included in the official nuclear decommissioning costs that have to be held in a separate trust, and that these costs that we're talking about here don't meet that specific definition to be included in nuclear decommissioning.
Gotcha. Thank you. This is, and y'all can answer this maybe, or maybe you'll someone else. All right, we talked about credit cards a little while ago, and when you've got how does the cost savings? Is there cost savings to the company by using credit cards, by preventing bad debt or bounce checks caused by having credit card payments? Does some of those costs offset at all?
So I don't believe that is the case, but I would address that question to Witness Quick as well. Okay. All right.
One question I had that we hadn't talked about that I don't think, in your original application, the company requested for residential customers a BFC, base facility charges $29, and a kilowatt hour charges of 11.367 per kilowatt hour first 800 kWh and 10.867 cents per kilowatt hour for each additional. Under the revised base facility charge of $11.96, what are the kilowatt hour charges? It's probably in there and it's probably right in front of me, and you probably said it today, but what are those? Because I know we're talking about money trying.
Yeah, I don't know that we've calculated that yet.
Okay.
Witness Wheeler will be.
Wheeler is going to get to that. Okay, good. We'll ask him. All right, commissioners, any other questions? Any redirect?
Yes, sir.
Okay. Okay, we'll go ahead and, how about we do Mr. Giles' follow-up question, and then. Okay, go ahead. Make sure your microphone's on.
Ms. Gartetego, responding to Commissioner Irvin's line of questioning, indeed, Duke has supported a Senate bill pending in the South Carolina General Assembly that would enable securitization under South Carolina law. You're aware of that, aren't you?
Senate bill where?
Senate Bill 110, Senator Massey, the Majority Leader's bill.
Yes.
Duke. Yes, go ahead.
I was just saying, I referred to a bill that we were supporting.
Yes.
And hope to expand to include storm costs.
Yes, sir.
That's the one I was referring to.
Yes, sir. And indeed, Sierra Club supports that bill, and so we're on the same side on that one, we hope. But your company presented two expert witnesses who testified in support of that legislation, before a Senate subcommittee, and you're aware that
Yes.
Duke had representatives there?
Yes.
And one of those representatives, I can't call the gentleman's name, I'm sorry to say, but he, I believe, was the internal Duke man, and the other one was an expert outside. And the internal guy said that, as I recall, and get you to tell me if this is right or not, that Duke Energy Progress made use of securitization enabling legislation in Florida to manage the costs for the early retirement of its Crystal River nuclear plant. Is that the case?
That is correct.
All right. And so that legislation generally can address typically non-recurring, extraordinary costs that the utility and regulators want to avoid undue impacts to ratepayers, despite the fact that there are prudently incurred costs and costs that ultimately are borne by ratepayers, but they're mitigated through the use of the securitization device. Is that right?
I think I got all that.
Okay. And storm-related costs are one of those. While storms may be more frequent these days, we fear, just the same hurricane costs, for example, or extraordinary flooding costs, we don't expect to be recurring year by year. You don't want those to impact ratepayers unduly. Securitization may allow you to soften the blow and still recover.
Yes, that would be the effect of it, yes.
And similarly, in the case of the Crystal River facility, extraordinary costs of retiring early a nuclear unit can also be spread with less pain to ratepayers by allowing recovery at a lower debt cost through securitization.
Correct.
All right, thank you.
Thank you. Ms. Grunman.
Thank you for your indulgence. I just want to make sure that the record's clear and that everybody understands. And these are questions that I don't care which one of you answers, because I think you both answered some questions before in response to some questions from Commissioner Williams. Mr. Gartetago, you testified earlier to what is known as the overall rate of return, correct?
Correct.
Okay. And so I just want to make sure that we're on the same page about what we're talking about. So 3 primary terms, and I want to make sure that we understand them. The cost of debt is essentially what you pay, interest rates or what have you, on the debt that you take out, the loans that you all secure for the company. Would you agree with that?
Yes.
And then the return on equity is akin to the profit that you are able to provide to your shareholders.
I don't call it a profit. I call it a cost that I pay to my shareholders.
Okay. As a non-accountant, as a non-person, it is the money that is left over after all payment of costs that can be returned to shareholders for their investment.
Yes.
And so the overall rate of return then is the delta between the cost of debt and the return on equity. Do you agree?
Well,
It's correct me. I'm happy to be corrected.
Yeah,
I just want to make sure that we understand.
It's a weighted average overall rate of return. And so if you look at the percentage of our investments that are funded by debt,
Yep.
and multiply that percentage by the debt rate, and then the percentage that is funded by equity investment times the rate of return on equity, you get the overall rate of return.
But I just want to make sure that that we're all thinking the same thing, that when we talk about the overall rate of return, it is not based solely on whatever the ROE is that is awarded to the company.
It also includes the capital structure and the cost of debt.
Correct.
We all agree.
So then I don't know whether this can go up on the screen, but Ms. Bateman, I think earlier you directed the commission, if they wanted to look into that particular issue, to take a look at page 2 of your Exhibit 1 set forth in your original direct testimony. Is that the correct reference that you provided?
It could be that one. I would say the most updated version of that exhibit is the Bateman Rebuttal Exhibit 1. But we could look at the original if you wanted.
I want to mark it down because I just want to make sure we're looking at the right exhibit here. And Ms. Bateman, for purposes of determining your overall rate of return, would you agree with me that that number has decreased as a result of the changes in the federal income tax? I'll ask it another way. Would you agree that your overall rate of return is less than it otherwise would have been but for the tax change?
I'm not sure I agree with that. Maybe I'm not following your question.
Well, so ordinarily you would have collected from customers, correct, money representing your obligation to pay corporate income taxes at approximately 35%.
Yes.
And then you would have subsequently not been collecting income taxes for that amount. Is that correct?
In this case, we're proposing to reduce the customers' rates by the amount of the
change in the tax
reduction.
rate.
Yes.
And the effect of that change, I think you were talking about it earlier, that the rating agencies made some comments about it with respect to the ADIT, but it also would have affected the income and revenue that you had to operate.
So I would disagree with that, and let me try to explain. So we have been deferring the impacts of the reduction in tax rate. So we had a reduction in cost with no change in revenue. So we deferred that reduction in costs. So our revenue stayed neutral and our costs stayed neutral up through new rates effective in this case. What we're proposing to happen when the new rates are effective in this case is for the revenue to decrease to match the decrease in costs. So the income's the same. The revenue decreases and the cost decrease. And so the return, I don't think, is impacted.
So I have in front of me here, and it's up on my computer, so maybe you can explain it to me, but I'm looking at page 1 of your Exhibit 1 in your original direct testimony.
Yes.
And I just want to make sure that I understand what I'm looking at as at the conclusion of this hearing. But if I look at what you've listed as column 3 accounting adjustments,
Yes.
You are showing I guess it's a $329 million adjustment for net income taxes. Is that correct?
You're on page 1 of my rebuttal?
No, I'm on your direct testimony. That's what I have up in front of me. We can use your rebuttal because staff has helpfully provided it.
Okay.
So if we're looking at column 3, accounting adjustments C, you have made an adjustment of
page 3.
on page 1
Page 1
of your rebuttal. Okay. Let's start all over.
Okay.
Let's just start all over.
I can go to my direct if that makes it easier.
I'm on your rebuttal.
Okay.
Page 1
Yeah.
of Bateman Rebuttal Exhibit 1.
Yes.
I show here that there is an adjustment of 33,032.
Yes. So $33 million.
And so that's an actual adjustment?
That is a result of all of the pro forma adjustments. So, for example, if we make an adjustment to increase costs to reflect maybe our Customer Connect program, there is a tax impact of that increase in cost, and that would be reflected here.
So this is the totality of all adjustments.
Yes.
But it is overall a $330 million decrease in revenue. Or decrease in cost, I guess.
You keep saying 333. You mean 33 million?
Well, this is in thousands, so it's actually 330 million, isn't it? Am I wrong?
I don't see any.
It's 33,032. That's the number is written.
Yeah, so it would be 33 million.
Okay.
Yeah.
And then
2,000.
and
Not
then,
300 million.
So
it's not 333 million. It's 33 million.
okay.
32.
33 million. Okay. And then column 4 is then showing an increase, and that increase of, I want to make sure I say the millions right. It's right here, it's 2336. Let's just say the number as it's listed. And so that results in, that's based upon if you are granted the total rate increase that you seek in these proceedings.
Can you Give me the column and row.
Column 4, line 8, the 2336.
So that would be the income taxes before the proposed increase. The level of income tax expense before.
That's what's left over.
We're not talking about return. We're talking about income tax expense.
I'm just where I'm struggling a little bit, where I'm getting a little bit confused as I go through these numbers is in column 2, you show 35,368. Then in column 3, there's a decrease of 33,032, which leaves 2336. But then somehow for the increase in column 5, it's 17 million.
Yes.
And I'm trying to understand what that 17 million is associated with. So let me just get to my end question, which may have been the easier way to get there. So explain to me what that 17 million is. I assumed that that was the increase in taxes associated with the rate increase proposed in these proceedings.
Yes. So what column 4 shows is that under present rates annualized, the income that the company is realizing on an adjusted basis is very, very small. And so income tax is very small. But if you were to increase revenue and therefore increase income to a level that allows the company an opportunity to earn the rate of return that we're proposing in this case, your income taxes increase because your income increases. And
so you're alleging, am I understanding you correctly that you're saying based upon current rate base, income taxes are 2.3 million?
I think it might be more helpful if you flip to page 3, where it lists the income tax impact by adjustment.
Mr. Chairman, we've gone so far beyond the original question regarding weighted average cost of capital, and certainly if there's a precise question, we don't have a problem with it, but we've gone pretty far afield.
Agreed.
I understand you're right. The purpose of the question was ultimately just to try to understand. Witness Bateman suggested that we could look to some of her exhibits to understand the overall rate of return, and I just was having some trouble squaring those numbers. So I was trying to understand if those exhibits in fact did what she had indicated they did, which was reflect the overall rate of return. So I just am struggling to understand the numbers, and so I was attempting to get clarity on that based upon her earlier testimony.
Okay, how close are we to that? Because we are getting way off.
I appreciate it. I'll try to wrap up quickly. Can you direct me again to your page 3?
Page 3 of my Exhibit 1?
Mm-hmm. Yes, ma'am.
It lists the income tax impact by adjustment. And so if you wanted to isolate the change in tax rate, that is going to be on line 34. And again, I'm not sure if that answers your question or not, but
I'm not sure that it does. Ms. Bateman, to the extent that I as I look through this in an attempt to prioritize the time of the commission, is there anyone else testifying on behalf of the company that could answer any questions with respect to the taxes other than yourself?
Yeah, so I mean, I can answer questions about the impact of the change in the tax rate on the revenue requirement. And then John Panizza, Witness Panizza, is our tax expert.
Okay.
That could answer questions about the impacts overall of the on the company's taxes of the federal tax reform. And then John Sullivan can speak to the impacts on the cash flows and credit metrics of the company.
I will see if I can't better direct my questions to Mr. Sullivan. Thank you.
Thank you. Okay, Ms. Smith.
Okay. Hear me? Okay, good, it's working. Mr. Gartitego, do you recall when Mr. Gile was referencing a North Carolina order in which the North Carolina Utilities Commission imposed a management penalty?
I do.
Okay, and so he walked through verbally the commission's decision, the North Carolina Commission's decision in that regard. Is that correct?
That's my recollection, yes.
Okay. And so I'd appreciate if we could take if the commission would take judicial notice of North Carolina Utilities Commission, their order in docket E2 1142. And that would be dated, sorry, I lost the date. That would be dated the 23rd day of February 2018.
That just made a copy made available to the parties, Mr. Chairman. I have no objection.
Mr. Gott, I was assuming you had a copy since you were asking about it.
I don't, but I appreciate
Okay. Well, you can have this one when I'm done with it. Mr. Gartitego, I don't know if you have your glasses with you, but can you see what's up on the Elmo?
With some effort, yes.
I want to introduce y'all to some new technology, trifocals.
I brought my reading glasses. Sorry.
And this is page 204 of that order. And do you mind, so that we have the full context of what we're discussing and what Mr. Gall brought up, can you please read that highlighted language?
Company has been penalized by the Federal District Court. It cannot seek cost recovery of these monetary penalties of remediation assessments. Further, the mismanagement to which DEP pled guilty was only for a fraction of the time DEP operated the impoundments. No evidence was submitted that DEP's management was imprudent from the initial date of operation.
Okay, thank you. And do you recall when Mr. Gall was talking about the DEQ order?
Yes.
And so just to be clear, that's the North Carolina Department of Environmental Quality. That's not the Utilities Commission, correct?
That's correct.
And there was an amount that the two of you discussed between $4 to $5 billion, which could be the monetary impact of that order if it stands.
Correct.
And do you recall Mr. Gallard asking you, would those amounts be requested of South Carolina customers?
Yes.
Okay. And of that, what would that allocation be? Is that 100% of those costs if they stand to South Carolina, or what is the split of that? Would North Carolina bear any of those costs?
Absolutely. North Carolina, as well as our wholesale customers, will bear portions of that cost. The general allocation for costs like that typically is, say, 30% of that comes to South Carolina, and even of that, only about 10 is DEP.
Okay. All right. Thank you. And just moving on, do you recall, let's see here, do you recall the discussion that you had with Commissioner Irvin on securitization?
I do, yes.
Okay. And is it your understanding that a securitization statute has to be topic specific?
Yes.
Okay. And maybe was that what you were referring to when you were talking about trying to get storms named in the pending bill?
Yes. I think currently the proposed language of the bill refers to, I believe, nuclear costs as well as costs incurred when the governor has declared a state of emergency. And I understand, based on legal counsel's advice, experts in this field, I've actually attended a NARUC seminar on this, that typically for the lenders to actually act on a statute like that has got to be very specific as to the type of cost that is being securitized.
Okay. And is also a predicate of that kind of statute, whether there's a receivable, whether the cost to be securitized have been deemed as receivable and recoverable by the utility?
Oh, absolutely. I mean, the underlying basis of securitization is the company's issuing bonds that third parties will buy, but underlying those bonds are promised by the state that the company will be allowed recovery of the costs that have been securitized. So that's a prerequisite, absolutely.
Okay. And in speaking about that predicate receivable, is it also a predicate that there's a return on that receivable to make the securitization work?
Absolutely. I mean, the savings to customers is one alternative is the commission allows the utility to recover it over some period of time at its weighted average cost of capital. The other option is I am able to issue bonds that allow me to only, let's say my weighted average cost of capital, as was approved in the last case, was 7.2%. But I'm able to issue bonds that only demand 3% interest. The difference, the 4.2%, is what customers are saving. And if it's a big pot of money, it means big savings as well.
Thank you. And do you recall Commissioner Williams asking you about the effort it took for the company to recruit and retain linemen? Do you
Yes.
recall that? And maybe we might want to say line workers.
Yes, I meant line work.
Okay, great. Had to get that in there, sorry. And so were you aware, is this a new topic? Has the company been speaking about this topic before?
Absolutely. We had an ex parte presentation right here about our grid improvement program, the need, the workforce impacts of the needs of the company, and efforts we were making through the technical college system to identify, train, recruit new linemen.
Okay. And in terms of...
Line workers, I'm sorry.
Thank you. And in terms of the retention of those line workers, do you recall the conversation about other states attracting those line workers?
Yes.
Okay. And is a similar level of competition for those resources intrastate between utilities in this state?
Absolutely. Absolutely.
Okay. Thank you. And do you recall when counsel for Walmart was asking you about the taxes? This may be for Ms. Bateman as well. Do you recall that conversation?
Yes.
And has the company been deferring the delta between the 35% and the 21%? Has the company been deferring those revenues to give them back to customers since January 1st, 2018?
Yes, we have been deferring those revenues and accruing a return on those deferred revenues.
Okay, and so the impact of deferring those revenues was not accretive to the company's bottom line. You didn't take that benefit to the bottom line.
No, and in fact, that's why I was confused, because we are not having any earnings benefit or earnings impact from the federal tax return. Our intention is to flow all of those benefits back to customers through revenue reductions, and so we've taken steps to make sure that is the case.
Okay, that's all I have. Thank you.
Thank you. Any recross? We're done with that. Okay. Oh, Commissioner Urban's got a question.
And just to follow up on the securitization issue, there's nothing that would prevent the North Carolina or the South Carolina General Assembly from including coal ash cost in a securitization bill. Would it? I mean, I realize it, as it currently stands, it's not part of it, but there's nothing to prevent it from being a part of it.
No, nothing that I'm aware of anyway.
In fact, if it does, it's going to be somewhere between $5 to $10 million if it has to be done the way the regulators say in North Carolina. Doesn't it make sense to do it by way of securitization?
I haven't thought through the full implications of that yet, but certainly in theory, yes, customers could save money by securitizing large sums of money versus.
In South Carolina, customers could save 30% of whatever the cost is going to ultimately be.
Yes.
Thank you.
Well, let me put it this.
I would just add, probably Witness Sullivan could speak a lot to securitization as well.
Okay.
And I think one issue with coal ash, and he could probably speak to this more eloquently, is there has to be certainty of recovery. And so there has to be an approved, prudent amount. And I'm not sure how appeals impact that. So there has to be like a level of certainty of recovery.
Assuming that the appeal is denied, then the company is going to, or either way, if you win the appeal or it's denied, you're going to at some point know what those costs are.
I think she was referring to appeals of a commission order.
Correct.
Because
I see you've appealed that as well in North Carolina.
No, we have not.
Okay.
We're talking about future appeals.
I see.
So for example, if this commission allowed us to recover for coal ash, because you would have to support securitization, then that decision, as long as there's an appeal pending on it, it'll be hard to get anybody to buy the bonds.
So in terms of the North Carolina Commission, now that the order is in the record, can I ask you, has the North Carolina Commission approved the coal ash cost recovery?
They have approved cost recovery for the deferred coal ash costs, and I believe there are appeals, though, in that case.
So those appeals would have to be resolved before you can securitize that debt?
Yes.
Thank you.
Thank you. Commissioner Whitfield.
Thank you, Mr. Chairman. I've got one follow-up along those lines. Commissioner Irvin just kind of jogged my memory a little bit. And I probably should remember this because I was here, for the Duke Progress merger. But you've testified talking about the ratepayers benefiting all these years from electricity from coal generation for decades is the term you say in your testimony and here on the stand. And none of us had a crystal ball prior to Dan River, but was in doing the due diligence during the merger, and I should remember this, do you recall if there were any discussions about prior to the merger, of course, taking on Progress, and of course you got it in both territories, but who would be, or they're assuming that liability, Duke corporate is obviously, the Duke is assuming that liability taken on Progress. So were there any discussions about something that might be so costly in the future to deal with?
Well, to be clear, Duke Energy Progress's coal ash liabilities are Duke Energy Progress's only, and likewise DEC's liabilities. So the plants that DEC owns today, like the Allen was one of those that were mentioned, the costs associated with complying with the laws at that site will only be borne by DEC customers. And costs associated with complying with the laws as they affect, like HF Lee or the Robinson site, would only be borne by DEP customers. In fact, as I recall, I wasn't a part of the due diligence for the merger, but as I recall, the merger agreements or the stipulation that was ultimately approved in North Carolina, and I believe we carried it over here, specifically said that DEP, North Carolina or South Carolina customers were not going to be responsible for Crystal River, for example, in Florida, or any other obligations we had in Indiana or Ohio. But they're separate corporate entities. So each corporate entity bears their own responsibilities.
Well, thank you. I just couldn't remember. I do remember that about Crystal River. You're dealing with different type of generation, of course.
Yeah.
But I just wondered, and of course, that merger occurred prior to this being pushed at the forefront, too. So thank you for your answer.
Thank you. Okay. Ms. Bateman, Mr. Garty-Tago, thank you for your testimony, and you may step down. It's okay. Let's call the next panel.
Mr. Chairman, at this time, we're calling Ms. Leslie Hunsaker, Ms. Retha Hunsaker, Ms. Leslie Quick, and Mr. Don Schneider. All right, and I'll start with Mr. Don Schneider and move on down the line. Mr. Schneider, please state your full name and your business address for the record.
Donald L. Schneider, Jr., 400 South Tryon, Charlotte, North Carolina.
By whom are you employed and in what capacity?
Duke Energy Business Services as General Manager of AMI Program Management.
Mr. Schneider, did you cause to be pre-filed in this docket 18 pages of direct testimony?
Yes, I did.
Do you have any changes or corrections to your direct testimony?
I do not.
Is it true and correct to the best of your knowledge?
Yes, it is.
If I asked you the same questions today, would your answers be the same?
They would.
Mr. Chairman, at this time, I would ask that the pre-filed direct testimony of Mr. Schneider be copied into the record as if given orally from the stand today.
Mr. Schneider's pre-filed direct testimony will be entered into the record as though given orally from the stand.
I'll move to Ms. Hunsaker next. Or, excuse me, yeah, I'll start with Ms. Hunsaker. Ms. Hunsaker, please state your full name and your business address for the record.
Retha Irene Hunsaker, and my address is 400 South Tryon Street, Charlotte, North Carolina.
By whom are you employed in what capacity?
Duke Energy Business Center and Vice President of Customer Connect Solutions.
Ms. Hunsaker, did you cause to be pre-filed in the docket 19 pages of direct testimony and one exhibit?
Yes.
Did you also pre-file an errata to your direct testimony on January 18th?
I did.
Do you have any other changes or corrections to your direct testimony or exhibit?
I do not.
And are they true and correct to the best of your knowledge?
Yes, they are.
If I asked you the same question today, would your answers be the same?
Yes.
Ms. Hunsaker, did you also cause to be pre-filed rebuttal testimony consisting of 8 pages?
Yes, I did.
Do you have any changes or corrections to your rebuttal testimony?
No, I don't.
And is it true and correct to the best of your knowledge?
Yes.
And if I asked you the same questions today, would your answers be the same?
Yes, they would.
Mr. Chairman, at this time, I would ask that the pre-filed direct and rebuttal testimony of Ms. Hunsaker be copied into the record as if given orally from the stand today.
Ms. Hunsaker's pre-filed direct and rebuttal testimony will be read into the record as though given orally from the stand.
Thank you, Mr. Chairman. And I also ask that her direct exhibit be marked for identification and also copied into the record.
Okay, Ms. Hunsaker's exhibit will be entered as exhibit number 18.
Last but certainly not least, Ms. Quick, please state your full name and your business address.
Leslie Quick, 400 South Tryon, Charlotte, North Carolina.
And by whom are you employed and in what capacity?
Duke Energy, Vice President of Revenue Services.
Ms. Quick, did you cause to be pre-filed in this docket 12 pages of rebuttal testimony?
Yes.
And do you have any changes or corrections to your rebuttal testimony?
I do not.
And is it true and correct to the best of your knowledge?
Yes.
If I asked you the same question today, would your answers be the same?
Yes.
Mr. Chairman, at this time, I would ask that the pre-filed rebuttal testimony of Ms. Quick be copied into the record as if given orally from the stand today.
Ms. Quick's pre-filed rebuttal testimony will be entered into the record as though given orally from the stand.
Thank you, Mr. Chairman. Mr. Schneider, Ms. Quick, and Ms. Hunsaker, do you all have summaries of your testimony for today?
Yes.
Mr. Schneider, would you please read yours?
Hang 1 second. I don't remember doing Mr. Schneider's rebuttal testimony, and it may be that I just didn't say it. Did we enter his? I want to make sure we got that entered into the record officially.
Sure, Mr. Chairman. So, and this is probably an appropriate time to do so. So there was a stipulation filed on March 14th, 2019, between the company and the ORS. As based off of the stipulation, Mr. Schneider's rebuttal testimony is no longer needed, and so we were not going to be moving it.
Yeah, I just had it on my list, so I wanted to make sure we didn't leave anything out.
Sure.
Thank you.
I'll also take the opportunity then, Mr. Chairman, to also request that the stipulation that I just referenced be entered in the record.
Okay, the stipulation on between
the ORS and the company.
ORS and the company will be entered as exhibit number 19.
Thank you, Mr. Chairman. All right, Mr. Schneider, you may go ahead.
Yes. Good afternoon, Mr. Chairman and fellow commissioners. The purpose of my direct testimony is to discuss the company's implementation of AMI technology, including deployment timeline in the Duke Energy Progress South Carolina service territory and the resulting benefits for customers. An AMI system consists of an advanced meter, a field area network, also known as a FAN, and back office systems that manage and maintain data collected from the meters. All meters often referred to, or excuse me, AMI meters often referred to as smart meters are digital electric meters with advanced capabilities that include two-way communications, interval usage measurement, tamper detection, voltage, and reactive power measurement, and net metering capability. As of September 30th, 2018, the company had installed about 38,000 AMI meters across its South Carolina service territory, and we will complete our deployment in early 2020. Utilities and electric cooperatives have been installing smart meters in South Carolina for years. And for customers who do not wish to have a smart meter installed, the company began offering an opt-out program on April 1st of this year, 2019. Today, customers with smart meters have access to detailed information about their hourly and daily usage patterns, which allows them to make more informed choices regarding their energy usage. Customers with smart meters benefit from the convenience of remote meter reading and remote disconnect and reconnect capabilities, eliminating the need for a technician to come to the customer's premise. During storm outages, damage assessment and repair verification can be done much more quickly when customers have a smart meter. With AMI implementation, the company is currently able to offer 2 new customer programs. Pick Your Due Date, which allows customers to select a billing due date that best aligns with their needs, and Usage Alerts, which provides alerts during the billing cycle that show charges to date and forecasts the month-end bill. Customers are notified that these programs are available to them once their meter is installed and ready for billing. The company also had also proposed to launch a pilot of Prepaid Advantage for Duke Energy Progress, a program virtually identical to the successful pilot launched in Duke Energy Carolina's territory. However, the company has agreed to withdraw that request from this case and to initiate it in another docket. This concludes the summary of my direct testimony.
Thank you, Mr. Schneider. Ms. Quick.
Good afternoon. In this case, Duke Energy Progress is requesting approval of a transaction fee-free payment program for credit, debit, and automated clearinghouse payment, collectively what I'll call credit card, methods used by our residential customers to pay their electric bills. Currently, customers are required to pay a $1.50 convenience fee collected by a third-party vendor for payments made by a credit card. The requirement to pay a convenience fee when making a payment is one of the largest frustrations our customers experience. Our customer service department routinely receives inquiries about no-cost electronic payment options, as evidenced by the company's monthly residential transaction surveys. Customers have grown accustomed to paying for other products and services with a credit card or debit card without a separate additional fee. Based on customer feedback and industry research, we believe the time is now for customers to no longer have to pay a convenience fee for payments made through any of its payment channels. We believe our residential customers will appreciate being able to use these payment methods with the company the same way they can with other companies. To offer this program, the company proposes to pay these costs on behalf of its residential customers and recover these costs as part of its cost of service. My rebuttal testimony addresses ORS witness Kelvin Major's recommendation to not include the company's growth projections in its proposed adjustment for credit card expenses. In the South Carolina State Conference of the National Association for the Advancement of Colored People, the South Carolina Coastal Conservation League, and Upstate Forever witness John Howitt's request for Duke Energy Carolinas to publicly file with the Commission monthly data regarding general residential and low-income customer counts by zip code, billing, receipts, arrearages, notices of disconnections, bill payment arrangements, disconnections of service for non-payment, reconnections of service after disconnection for non-payment, accounts written off as uncollectible, and accounts sent to collection agencies. In response to ORS Witness Major, I explained that the company's proposal is to allow residential customers to make payments through several methods without incurring a transaction fee. We know that customers want more fee-free payment methods available to them, and this program is designed to give them exactly that. However, I explained that unless a growth projection is included in the adjustment, the company will be penalized for implementing a program designed to improve our customer satisfaction with their payment experience, since it will not be able to collect the full cost of the program. Based on historical growth and industry research, the company projects a 20% growth in credit card usage by our customers once the fee-free program is deployed. I then go on to describe the company's process to forecast the growth projection based on historical data and industry research to demonstrate the reasonableness of the calculation. In response to Witness Howitt, I explained that the company does not currently track the information requested by Witness Howitt by zip code or socioeconomic status in the normal course of his business. Currently, any attempt to provide the requested data by zip code would require the company to perform a series of ad hoc queries on the company's systems to extract the data without a clear way to verify its accuracy. I also share applicability and potential privacy concerns with the data requested and distinguish the company from the state-mandated requirements in other jurisdictions as it pertains to this type of data. This concludes a summary of my rebuttal testimony.
Thank you, Ms. Quick. Ms. Hunsaker.
Good afternoon, Mr. Chairman and Commissioners. My direct testimony discusses the Customer Information System, or CIS, used by Duke Energy Progress, and explains why it is necessary to convert that system into a modern customer service platform known as Customer Connect. Particularly, the current system is nearly 30 years old and is past the point where modular bolt-on systems or upgrades are effective. Our business and our customers' needs are very different than they were when the original system was constructed, and industry research confirms that customer expectations are changing. They are more fluid, and consumers benchmark us against other customer service companies such as Amazon and FedEx, where there is transparency and awareness in their processes. Through the plan and initiate phase of the program, the company leveraged industry research to better understand customer expectations, and based on collective experiences of our own CIS, we knew that the new system needed to be configurable, adaptable, and customer-centric, not simply a meter-to-cash replacement. Customer Connect is the next-generation customer platform with new customer engagement and integrated operations and analytic capabilities that will provide the customer with more choice, convenience, and control over how they do business with Duke Energy. The company began deploying new capabilities in 2018 and will continue to have system functionalities in service and beneficial to customers every year of the program, leading up to full deployment for Duke Energy Progress in 2022. The company is seeking to adjust its test year operating and maintenance expense associated with the project from approximately $200,000 to approximately $1.4 million, which reflects the average expected annual O&M expenses over the next 2 years from 2019 through 2020. The company derived these forecasted expenses using the best and final offers from the selected vendors as the foundation for our forecasts. My rebuttal testimony responds to ORS Witness Payne's recommendation to disallow the projected 2-year average O&M expense because, he argues, the costs are not known and measurable. In response to Witness Payne, I explained the company's calculation of incremental O&M expense for 2019 and 2020 clearly meet the known and measurable standard because, 1, the company has entered into fixed contracts with multiple vendors to develop the program. 2, the contracts contain provisions requiring the company to provide specific levels of internal labor to support that work. And 3, the fixed contracts contain specific price terms. I further explained the discipline process the company used to forecast the expenses. I also iterate the company's commitment to Customer Connect and discuss the capabilities and benefits the program has and will continue to enable for our customers. This concludes the summary of my direct and rebuttal testimony.
Thank you, Ms. Hunsaker. Mr. Chairman, the witnesses are available for questions. Quickly, before I sit down, I just want to acknowledge something. So the stipulation, just for clarity of the record, so I referred to a stipulation that was filed March 14th. That's not the one I meant to refer to. There was a particular stipulation pertaining to the prepaid advantage program and moving that to a separate proceeding. That was filed on April 10th, and that was the stipulation I meant to refer to and ended the record.
Okay, so the April 10th. Okay, got it.
Thank you.
Okay, all right, we're at 4:15. Walmart, no cross. Vote Solar, NAACP, SCCL, Upstate Forever.
Yes, briefly, Mr. Chairman. you, Mr. Chairman, members of the Commission. Mr. Schneider,
Yes.
good afternoon. Do you remember on Friday, March 22nd, I asked you a series of questions during the DEC evidentiary hearing with regard to customer programs?
Yes, I do.
Recognizing, of course, that DEP is a different utility and the numbers were different. Subject to those caveats, if I asked you those same questions today, would your answers be the same?
Yes, they would.
Ms. Hunsaker?
Yes.
Do you remember on Friday, March 22nd, I asked you a series of questions during the DEC evidentiary hearing with regard to Customer Connect and billing transparency?
Yes.
Ms. Ferguson, get close to that microphone. They're having a hard time hearing you on live stream.
Recognizing that DEP is a different utility and the numbers were different, subject to those caveats, if I were to ask you the same questions today, would your answers be the same?
Yes, they would.
One additional question. Will the new customer information system be capable of handling on-bill financing?
We are still in the design around that. I'm not certain whether we'll be able to do on-bill financing.
Is this something that you are exploring?
We're exploring the capabilities around loans and leases. This is something we don't have the answer to that at this point.
Does anyone have the answer to that at the company with regard to on-bill financing?
No. The SAP, we're taking the SAP system, which we talked about in the last proceeding. That does not, loans and leases and on-bill financing is not an out-of-the-box capability within that system. And so if we were to do something like that, that would be a customization. And so I don't know that we have a lot of benefit in doing that right now. And so we're looking at if that's a customization, is it something we would roll out with the system or we would defer to post-2023? That's the decision that's being made. And we've not made that decision yet.
But it is within the realm of possibility at this point?
It is within the realm of possibility with additional costs, yes.
Ms. Quick, do you remember on Friday, March 22nd in the DEC evidentiary hearing, I asked you a series of questions regarding customer information possessed by DEC?
Yes.
Recognizing that DEP, of course, is a different utility and the numbers are different, if I were to ask you those same questions today, would your answers be the same? Yes, they would. Mr. Schneider, will the new billing system be able to prevent incidents like the $9,000 unauthorized withdrawal that we heard about earlier today from customer accounts like Mr. Irvin, who testified in public at the public night hearing?
I think that's a question for Ms. Hunsaker.
Ms. Hunsaker, I'd like to direct the same question to you, please.
Okay. Customer Connect is going to have a lot of functional capabilities that we don't have today. One of those is that we will not be removing drafts from a customer's account if there's any open work orders on that account, which is kind of the root of what happened with that customer. And so we'll be addressing that as part of our normal meter to cash in 2022. The other thing that I would say is we also have the ability, if there is an unfortunate situation like we had with that customer that would happen, we have the ability to put the money back in his account rather than having to issue a refund check and then overnight. So we have a couple capabilities that would have made that much better for a customer.
Thank you. No further questions.
Thank you.
Mr. Chairman, I'd like to ask the Commission to please take judicial notice of Ms. Hunsaker, Mr. Schneider, and Ms. Quick's testimony in the DEC evidentiary hearings.
Okay, we will.
Thank you.
Okay. Mr. Guile. Energy users. Nucor. ORS. Hang on before you start. Have you got less than 7 minutes? Because we're leaving at 4:30, or at least I am. I have to sing tonight in Greenwood, and my mama's coming to hear me. Okay. Cool. Okay, so we will continue this tomorrow, and tonight, this afternoon, we are adjourned.